Time for the market report, looking at the livestock markets this week.
That's right. We've got a few USDA reports and an interview with an extension expert. But first, the numbers. What were last week's biggest gains and losses? And then several USDA reports that help explain why the markets are moving. And finally, MSU Extension livestock economist Josh Maples gives us an update on our current cattle situation. So, markets closed last Friday moving down, but not dramatically. Well, except for a few commodities. Let's take a look. Last week's biggest gain, live cattle up 4 3/4 cents, and near 2 3/4 rise from the previous week. Last week's biggest loss, however, sugar, down over a cent, and over 6% drop from the previous week. And that's pretty significant. So, why the big change? Well, several recent USDA reports can shed some light on sugar prices and live cattle prices as well. In short, we have an influx of sugar coming in, quite a change from earlier this year, and cattle herds continuing to rebuild. Here's Farmweek's Bella Bingham with the summary.
The sugar and sweeteners outlook shows U.S. sugar production down, mostly in sugar beets and sugar cane due to unfavorable weather. As a result, U.S. sugar supply down 63,000 short tons raw value, or STRV. U.S. imports therefore expected to increase 21,000 STRV. World total use down 100,000 STRV, although 2024 exports the largest in a decade. Global ending stocks up 37,000 STRV. The livestock, dairy, and poultry outlook shows tight cattle supplies, predicting less beef production throughout this and next year. Cattle prices also predicted to reach new highs in the coming year. For dairy, forecasts for milk cow herds, milk per cow, and total milk production are up despite the current lower herd status, and it looks like that'll continue into 2025. Pork production also expected to increase into next year, and about a quarter of U.S. pork will likely be exported. In poultry and eggs, total broiler production lower, likely due to bird flu, but flocks are coming back. That being said, exports predicted down this year, but slightly up in 2025. Egg production, despite lower flocks, is rising this year and is expected to continue next year as well.
So, with that context in mind, we turn to the current cattle situation in Mississippi and the U.S. I spoke with MSU Extension livestock economist Josh Maples, and he had quite a bit to tell us about how much has changed so far this year, and it's not all bad news. All right, Josh, what's the pasture situation look like for 2024?
Yeah, so we're in much better shape, Zach, than we have been the past couple of years in terms of drought and pasture. You remember the last few years we've talked about severe droughts in some parts of the U.S., and thankfully most of that is mitigated. There's very few areas in the U.S. right now that are under any sort of drought categorization. So we're entering, 2024 so far in a much better spot. Hopefully we're going to have more available pasture, and we've also talked about having fewer cattle in general, so that's different for this year, at least for right now, that we're not continuing to talk about drought conditions.
Well, that's good. So with the drought conditions being better, I suppose that means our hay stock situation is also looking better.
Hay stock situation is significantly better than it was in 2023. So 2022, if you recall, was a really tough hay year, and so the hay stocks report comes out in May. It's really talks about stocks that were produced last year, so stocks that we have on hand. So we're up about 46% at the nationwide level on hay stocks. So a lot better situation right now than we were sitting in at this point a year ago. Now, of course, the 2024 hay season is upon us. It's the plentiful rains that we have gotten in Mississippi and in other areas are a good thing in terms of the grass and forage growing, but can also, of course, lead to some challenges in actually getting the hay out of the field. And so that's kind of the spot producers are in right now, is pasture conditions are in better shape. The hay fields are probably in better shape than they have been. We need some breaks in the rain to be able to get the hay baled and out of the pasture and put up.
All of this is good news, but we also know that the herd is still on the lower side. So how has that affected calf sales?
It's affected it a lot, and the sales of calves and feeder cattle in general in 2024 has been really interesting to track. So if you look at the national receipts, we're down about 6% in terms of cattle, feeder cattle or stocker cattle that were sold in the first 19 or 20 weeks of 2024 so far as compared to last year. You know, that aligns with this tighter cow supply that we've talked about. You know, there's fewer cows out there. We should expect fewer calves to hit the ground. So we're starting to see that. But it's also been interesting the timing of it. So if you look at February and part of March of 2024, our receipts were actually quite a bit higher than they were in previous years. So producers saw those pricing opportunities. They saw the higher prices early in the year than they've been used to, and they went ahead and offloaded quite a few cattle that they might have normally stuck around or held until a little bit later. So we've seen this interesting kind of trend this year where we saw sales go up, you know, the first month or two of the year, and then now we're back down below year-ago levels. But altogether down about 6% from where we were a year ago in terms of cattle, feeder cattle, stocker cattle sales.
And that's it for a deeper look into the markets. A lot to sift through, and every bit has an effect on prices, which in turn affects the consumer. But for now, seems things are all right.